Your unique story, our global audience. Global One Media.
Hello, and welcome to Global One Media's series of podcasts with key figures from the industry to help you understand the recent news and make informed and intelligent decisions. I am Munir Barazi, your business analyst and host, and today I'm very pleased to welcome Ruadhan O, the cryptocurrency investor and developer and the founder of Seasonal Tokens, a project that offers its unique tokens to help investors get more out of digital assets. Hello, Rowan. Thank you so much for joining us today.
Thank you so much for having me. It's a pleasure to be here.
Could you start by telling us about Seasonal Tokens and what inspired you to found this project?
Absolutely, yeah. So the tokens are kind of like Bitcoin. They're proof of work cryptocurrencies, and they're designed to become more scarce as time goes on. But there are problems. Bitcoin was the original investment that had this property, and it's been very, very profitable for Bitcoin investors. Anybody who bought Bitcoin when it was worth a few dollars is probably very happy today. And the tokens are designed to have some of the same properties. So the rate of production of the tokens decreases over time, the same way that the rate of production of Bitcoin decreases over time. So initially there were 50 Bitcoins produced every 10 minutes, and now there are only 6.25 Bitcoins produced every 10 minutes. And the result of that has been that the number of Bitcoins coming onto the market every day has been gradually decreasing over the years. And the consequence of that is that even if the demand stays the same, the price rises because the number of tokens available for people to buy decreases. So with a decreasing supply and with constant demand, then you can expect the price of Bitcoin to rise over time. So basically, when Bitcoin appeared, people who looked at the schedule of production of Bitcoin and realized that there are going to be lots of Bitcoins produced very early, and then if you look a decade into the future, then you realize that there's going to be much fewer Bitcoins produced every day, then you can anticipate that that's going to have an upward pressure on the price. So this was why Bitcoin appeared to be a good investment when it appeared. And seasonal tokens are designed to have the same characteristic. Once every 9 months, the rate of production of one of the 4 tokens gets cut in half. And that means that as the years go by, it will become harder and harder to obtain seasonal tokens. So today we're living in kind of an era of plenty. And the idea is that as time goes on, each token, one by one, will become scarcer than the other tokens. So spring tokens were the most plentiful token. They were produced at the fastest rate, and they were the cheapest token until June of last year. And then after that, the rate of production of spring was cut in half, and spring became produced at the slowest rate of the 4 tokens. And as a consequence of that, over the following months, it became the most expensive. So what recently just happened as well was that we just had the summer halving a few days ago. On the 6th of March, the rate of production of summer tokens was cut in half. And summer tokens have been the cheapest token for the last 9 months. And now we can expect over the next few months that summer tokens will gradually become the most expensive token. So what happens is that the tokens become scarcer and scarcer over time, but it happens in a staggered way. First, there's an era of plenty for spring tokens, and then there's an era of scarcity for spring tokens, and summer tokens become the plentiful ones. And then what's just happened is that the era of plentiful summer has ended. And now we can expect autumn tokens to be the cheapest and most plentiful for the rest of the year. And then in December, the rate of production of autumn tokens is going to get cut in half. And then it will be an era where winter tokens are the most plentiful. But every time this happens, the rate of production is always decreasing. And this means that tokens are becoming scarcer and scarcer. And for example, in 45 years from now, it will take a whole day of mining to produce 1 token of each type. And that means that if you get tokens today when there are tens of thousands of tokens produced every day, then you're basically able to buy them in a better environment, and it's more favorable for early investors. Whereas later investors, it will only be possible to buy 1 token a day, without exhausting the entire supply of new tokens. So today you could get plenty of tokens, and in the future it won't be quite as easy. So this is why, from an investor's point of view, it may be a good idea to get in early, the same way it was with Bitcoin, because you can then anticipate that in the future you'll be in a better position than other investors because you'll have been able to get them while they were cheap and plentiful.
So the idea is to ensure scarcity to some extent. And the way I understand it is that those tokens work in tandem in a way. And there are four tokens following the four seasons. Can you tell us a bit more about the problems those tokens solve for the users?
Absolutely, yeah. So there are two major kind of problems that happen with existing proof of work cryptocurrencies like Bitcoin and Litecoin and so on. What happens is that with Bitcoin, for example, once every 4 years, the rate of production of Bitcoins is cut in half. This is a halving. It happens with the tokens as well. But when it happens with Bitcoin, there's a problem that appears, which is that the cost of producing Bitcoins doubles when this halving appears, because it takes the same amount of electricity to produce a new Bitcoin block, but the reward, the number of Bitcoins that you get for doing that gets cut in half. So the cost of producing Bitcoins doubles, but the price doesn't double immediately. So what happens with Bitcoin once every 4 years is that you have essentially a lot of miners go bankrupt because it suddenly becomes unprofitable to mine Bitcoin. And that's going to happen again this year with Litecoin. There's going to be a Litecoin halving this year, and we can expect that a lot of Litecoin miners will go bankrupt afterwards, or at least will have to stop mining because it will suddenly become unprofitable to mine. So, for example, Core Scientific, which is one of the biggest Bitcoin miners, it declared bankruptcy a few months ago, and that's something that's not unexpected. It's like almost a natural part of the way that the system works when you've only got one coin and you've only got one kind of one source of one channel that connects the mining to the assets in the financial markets. So, because when the cost of production doubles but the price doesn't double, miners have to stop mining. And essentially, that's not great. But there's another negative consequence that happens after that, which is that there's an asset bubble in the Bitcoin price. So if anybody's been looking at the history of Bitcoin prices, you can see that once every 4 years, the price it shoots up, and it does it very dramatically. And that's in response to the reduction in supply. But what happens is that people don't know how far that price is going to rise. They don't know when the effect of the halving has finished. So they continue investing, and they continue, as long as they see the prices continuing to go up, they continue to invest in Bitcoin, thinking that it's going to go up higher and higher. And they can't see how much of this increase in price is due to the effect of the halving and the reduced supply, and how much of it is due to new investment. So that's kind of a problem that happens with Bitcoin. It's a problem for miners and it's a problem for investors. With miners, there's the bankruptcy problem, and with investors, there's the asset bubble problem. So with what seasonal tokens do is, because there are four tokens, and only one of them gets halved, that means that there are still kind of three channels through which miners can exchange their mining input for assets. And the result is that you don't have this problem of bankruptcy, because miners are just able to switch to another token. When the rate of production of Spring was cut in half, then it became unprofitable to mine Spring, but that didn't mean that miners went bankrupt. They could switch to summer or autumn or winter. And after that, gradually the price of Spring rose and it became profitable to mine Spring again. And that was something that stopped the miners from having this bankruptcy problem. But this is kind of solving a problem that miners have, but the way that it's solved is through investment. Because there are investors who are they're not just passively holding on to their investment. If you buy Bitcoin and you keep your Bitcoin, then you have one Bitcoin forever, and that's essentially your investment strategy is buy and hold. But if you have seasonal tokens, there are four different tokens, and the investors have the ability to move capital from one token to another. So by trading one token for another, they push down the price of the token they're selling and push up the price of the token that they're buying. So after the Spring halving, for example, Spring became unprofitable to mine. But investors knew that Spring was going to become the most expensive token over time. So what investors did was they traded other tokens. They traded their their summer and their autumn and their winter tokens for Spring tokens, and that allowed them to gain more tokens in total. And it also pushed up the price of Spring. And that restored the profitability of mining Spring, and that essentially allowed mining to continue uninterrupted and allowed investors to take all of the cheap Spring tokens off the market, because the reason that Bitcoin becomes unprofitable to mine after halving is because the market still has a lot of cheap Bitcoins that are left over from the previous era when Bitcoins were more plentiful, and the market hasn't kind of realized yet that we're now in a new era and that Bitcoins are never going to be that plentiful again. And that's why the price is still low. But if you're a Bitcoin investor, then your money is all in Bitcoin. You can't buy more Bitcoin without investing more money. But if you have seasonal tokens and that, say, for example, what's just happened with Summer, the rate of production of Summer was cut in half. The Summer is still the cheapest token, but we expect it to become the most expensive. But Summer is currently unprofitable to mine. So what's going to be happening over the next few months is that investors will trade other tokens for Summer tokens. And because they anticipate Summer will become the most expensive token. And by doing that, they kind of take all of the cheap Summer tokens that are left over from the previous season off the market. And it's basic. This is helping the miners because there was a glut of cheap Summer tokens. That's what's currently making cheap Summer unprofitable, is these Summer tokens left over from the previous season. When investors take those Summer tokens off the market, then they gain more tokens in total, and they also bring the price back to a more rational level, and that makes it profitable to mine Summer again. So it's kind of a cooperation between miners and investors, where the mining gets into a problem when these halvings happen. And in cryptocurrencies like Bitcoin and Litecoin, there's no freedom of miners to switch their mining power to another token, or there's no freedom of investors to move their capital around. But with seasonal tokens, the miners can shift away from the unprofitable token, and investors can take the cheap tokens off the market, and then they can restore a market balance, and this results in a lot less disruption to the economy than you have. We won't have miners going bankrupt. Instead, what we'll have is an opportunity for investors to help the miners by taking the cheap tokens off the market.
It's a fascinating concept, and those tokens work together like an ecosystem, so to speak. If you could elaborate also a bit on the concept of proof of work, how does it work, and how is it different from proof of stake?
Absolutely, yes. So with proof of work, what is effectively happening is that people are trading. They're using energy to produce new coins, and this means they have to pay their electricity bills. And this creates a kind of a real economic connection between the assets and a cost of production, or like a genuine cost of production. So if somebody can help the miners to mine the tokens more cheaply, that's worth money. And investors who have seasonal tokens are able to help the miners by trading one token for another, taking the cheap tokens off the market. That helps miners, and that's a valuable service they provide to the miners, and that's worth money. But with proof of stake, what happens is that people they take their digital assets, their Ethereum or whatever it is that they have, and they lock it up for a while, and instead, and they get mining, they get rewards in return. The newly produced Ethereum goes to the stakers rather than going to miners, and the result of that is that it's not actually paying bills that produces the connection between new tokens and actual wealth in Ethereum or in proof of stake cryptocurrencies. Instead, it's people are foregoing the use of their assets by locking them up in the staking program. And so this is not quite the same as the way that it works with proof of work, where there are real bills to pay, and it's something that is definitely got a monetary value, if that makes sense.
Fascinating. And in addition to mining, users can also engage in farming. Could you also tell us a bit more about the concept of farming and how users can leverage it?
Absolutely, yeah. So with farming, what happens is that there are decentralized exchanges, And with a decentralized exchange, if you want to trade Ethereum for a seasonal token, for example, what needs to be present on the decentralized exchange is a big pile of Ethereum and a big pile of tokens, so that investors or traders can come along and they can take some Ethereum and add some tokens, or take some tokens and add some Ethereum. So you need to have this large stockpile of both assets whenever there's a trading pair on one of these decentralized exchanges. And there needs to be a motivation for people to provide that. They're not going to do it just because they want to support the market. They want to get a monetary return. So one of the ways that this incentive is provided is that these decentralized exchanges like Uniswap and so on, they'll allow people to take transaction fees. So you may get a 1% transaction fee every time a trade happens, and this is your motivation for providing the Ethereum and the tokens. But that's called liquidity mining. And it's one motivation. It brings in a certain amount of income for the people who are providing the liquidity, but it may not be enough of an incentive. So what yield farming consists of, essentially, you provide an extra incentive for people to provide liquidity by paying people directly to do it. You have a regular cryptocurrency income for people who provide liquidity. So we have farms on the Polygon network and on the Ethereum network for seasonal tokens, and people who deposit seasonal tokens and deposit Ethereum and allow people to trade back and forth using their Ethereum and their tokens. Those people, they get the transaction fees from Uniswap, but they also get a regular cryptocurrency income that comes from essentially tokens that are distributed to farmers in exchange for providing these services.
It's a good incentive. And are you witnessing more liquidity in your tokens with time?
Yes, definitely. So what's happening is that as time goes on, the number of tokens in the world is increasing because more tokens are being mined every day, more tokens are being produced. And the result of that is that people, the miners and the investors who have these tokens, are looking for ways to increase their yield. So they use farming and they deposit their tokens into Uniswap. And that means that if you wanted to trade like a million tokens of one type for a million tokens of another type, basically there may not be enough tokens on the market today to do that. But as the number of tokens increases, it will gradually become possible to do that, because there will be more tokens essentially available, because a certain fraction of the investors who have these tokens are going to use them for farming.
And in addition to those seasonal tokens you've already developed, which are fascinating on their own, are there other projects you're currently working on?
I'm pretty much dedicated to seasonal tokens at the moment, but we have interesting kind of directions that we're moving in. One of the things is that we're anticipating that it's going to become complicated to predict exactly what economically is going to happen in terms of how large a return people can get on their investment. So if I can explain, I have a chart here. Okay, so what happens over time is that because the prices of these tokens are designed to slowly cycle around each other, we had an era of cheap spring, and now we have an era of expensive spring. And winter used to be the most expensive token, and now it's not as expensive as it was in comparison to spring. So somebody who had winter tokens early on could have traded them for spring tokens, and they would have gotten more tokens in total. And now that spring is more expensive than winter, they could trade their spring tokens for even more winter tokens. So you can gain tokens over time by trading one token for another. And but the rate at which you can exchange one token for another, it depends on how these prices change, and that depends on the behavior of the investors and on the behavior of miners. So what we're doing at the moment, or what I'm doing at the moment, is trying to construct detailed economic models of how this plays out, and to calculate exactly what is the rate of return that you can get by trading tokens for more tokens of a different type. So every time it goes through one of these cycles, you get a chance to trade again, because you trade the expensive one for the cheap one, and then the cheap one becomes expensive, then you can trade the expensive one for the cheap one again. And so there's a rate at which you can gradually increase your holdings over time, and you don't need to spend more money to do it. So what's kind of a project is to calculate exactly the rate at which this could be achieved. And so I've been constructing my own economic models and trying to do simulations. What I found actually is that you can feed information into ChatGPT, into this AI, and you can ask it, tell me what you think, and it actually produces relatively reasonable answers. So the one kind of ongoing project, which I think is kind of interesting, is to try to integrate ChatGPT into these economic models, because there are so many factors to predict. We don't know how the investors are going to behave. We don't know how the miners are going to behave. So many things affect it. But using an artificial intelligence to try to assemble all of these things and to construct the assumptions is something that I think it's an interesting project as time goes on.
Fascinating, and there's certainly a lot of things to follow in this project as we move forward. Ruadhan O, the founder of Seasonal Tokens, thank you so much for being with us today and sharing all of those insights and updates. We look forward to seeing you again and hearing more updates from you soon.
Thank you so much. It was a pleasure to be here.